A new trading week is upon us. My name is Kyle, and welcome to my channel. Today I'm going to take a look at the price action of Ethereum, Cardano, Zilliqa, Vechain, and Loopring. I'll leave some timestamps in the description down below, so if you want to skip ahead to your favorite coin, feel free to do so. Let's get into it. Ethereum up on the daily chart, and Ethereum continues to look strong to me right now as it continues to close daily candle bodies above that 10 simple moving average. And every time that Ethereum dips down below that, the bulls are literally front running the 21 at this point in time. So that's telling me that buyers are still pretty eager to buy Ethereum as it marches its way up higher. Dropping down below to the RSI is finding its footing at the edge of the bull's control zone, living above the exponential moving average, and both the exponential moving average and the RSI are living in the bull's control zone, which is overall a fairly strong point on the board for the bulls coming into the new trading week. Dropping down the stochastics, nothing really to go by here. They're trying to cross the downside, but they're just simply nuclear because Ethereum is in trending behavior. Down below in the MACD, a bearish cross taking place right now, but isn't really backed up by much negative momentum here on the histogram, so overall not looking like a death sentence. To me, what I'm going to be looking for is I'm going to be looking for Ethereum to close daily candle bodies above these ones here. As a matter of fact, let's just plot in a little liquid zone here. I'll plot a liquid zone in like that. So this new liquid zone I just plotted in has a bottom side coming in around 1,958, the top side coming in at 2,041. So coming into the new trading week, if Ethereum starts closing daily candle bodies above the top side of this liquid zone, then I think upside and continuation is just simply the name of the game. If Ethereum starts closing daily candle bodies below that 10 simple moving average, which is coming in right now around 1,865, then I'd be looking to that 21. As looking left, the 21 has been legendary in picking up price action anytime that Ethereum gets below that 10. So that 21 right now is coming in around 1,746 and likely a buy. However, if Ethereum starts closing daily candle bodies below that 21, then likely a test of the positively sloped 30 simple moving average. And I do see that's relevant because when I look left here, I see that the 30 picked up the candle bodies here, and also picked up this wick here. So definitely a respected moving average. And that 30 is, at time of recording at least, is coming in around 1,629. But that does not look like the probable scenario. But at least I've set my conditions in place in case that Ethereum decides to move down that way. So things are overall looking good here. It is a Sunday, so we're going to have to see how the markets open tomorrow on Monday, traditional markets that is, and the CMEs for Bitcoin. And so long as there's no dumping action going on there, which I don't think that there will be, but if there is, I don't know for sure, not a crystal ball. If there is, those are my conditions that I've set in place for myself, and those will be my actionable signals as to either buy the dip and or play a breakout trade. But I never front run these liquid zones. I look for those candle body closures. That was my signal right here to get long on Ethereum once again, and I'll be looking for the same behavior. And as you can see, yeah, it came back and tested that purple box zone over time, but confirmed it as support, keeping me in the trade as it moves up higher. So things overall looking good here for Ethereum. Cardano up on the daily chart, and Cardano looking great, having a nice breakout yesterday, shredding this purple box liquid zone with the bottom side coming in around 94 cents and the top side coming in around 98 cents. I see this breakout was initiated off the 10 simple moving average, and looking left, I see that Cardano hasn't closed any daily candle bodies below that 10 in quite some time. I do see, however, that Cardano got that daily candle body closure that I was looking for below the top side of that Bollinger Band and initiated that pullback. And of course, I had my eyes fixed upon that 21 because looking left, I see the 21 has offered up some pretty significant buy opportunities when Cardano decides to pull back. It's very nice to see the bulls front running that 21, picking up price action, getting it back up above this horizontal here, coming in at 84 cents, leading Cardano to grind out that 10 simple to the inevitable breakout that we're seeing coming in yesterday on that strong convincing volume, getting above that moving average, as well as wiping out the last several days of volume read. Checking out the RSI angled to the downside, and some people are probably looking at this like some bearish divergence shaping up. But to me, bearish divergence is not divergence until it is confirmed as divergence. However, if Cardano does decide to have a pullback here, then I'll be looking to this purple box zone with that top side coming in around 98 cents. And I'll be looking to that to hopefully confirm itself as future support. So an SR flip of the former resistance becoming future support. And in the next couple of days, the 10 simple moving average is likely living up above that. And of course, Cardano hasn't been closing those daily candle bodies below that. Now, if Cardano is, for some reason, able to close daily candle bodies below the bottom side of this liquid zone at 94 cents and taking out that 10 simple moving average, then perhaps there's a change of behavior and maybe another test of the 21. At the time of recording, the 21 is coming in around 80-cent mark, and of course, I'd be viewing that as likely a buying opportunity, as that's exactly what it's been time and time and time again. And until those daily candle bodies start closing below that 21, That's likely how I'd view that. Of course, I would assess things at that time, as Cardano is going to be vulnerable to what Bitcoin does, what the rest of the market does. So, of course, there's lots of unknown variables. This isn't a crystal ball, but it is a statistical advantage over the market. So that's just simply how I'd be viewing that. MACD down below looks to be regaining some positive momentum here as this island of positive momentum, the histogram, continues to increase with the moving averages pointed up to the upside. Stochastics, big fat nothing burger, really looking to try to cross to the downside. Overall, not a big deal. I mean, stochastics to me are a range-bound indicator, and when things begin to trend, they pretty much just live nuclear in these areas, and to me, it's just an overall sign of strength. So coming into the trading week, that's what I'm going to be paying attention to. As of right now, my bias has to be to the upside, as Cardano just had a very legitimate breakout to the upside, and as you can see, it is just marching its way up higher and higher, creating higher highs and higher lows along the way, so my bias remains bullish until Cardano gives me a reason to not be bullish. And of course, I've set my conditions in place to be looking for downside price action if and when Cardano decides to take that route. Zilliqa up on the daily chart, and Zilliqa giving me some key areas to be paying attention to. Most notably, this purple box liquid zone that has a bottom side coming in at around 14.5 cents and a top side coming in at around 16.5 cents. At the time of recording, I see that ever since Zilliqa got above this former liquid zone, there was a beautiful back test of it, confirming it as future support, and the rest was history, but there's been no daily candle body closures below the 10 simple moving average. Overall, a sign of strength. Dropping down to the RSI, I see that the RSI is finding support at the edge of the bull's control zone, and perhaps some people are arguing that there's some bearish divergence present here. Depending on how you like to do your analysis, you can see that the daily candle bodies got higher here than these bodies here, but the wicks certainly came in lower than these wicks here, so perhaps not the most actionable bearish divergence. It is also notable that the RSI is finding that support on the edge of the bull's control zone and is looking to confirm above that exponential moving average perhaps in the next couple ticks. And if that is the case, then I would say that whatever divergence may have been present here could be played out at that point in time. Overall, a point on the board for the bulls as price action holds above that 10 simple moving average. MACD down below here is just showing a loss of momentum on the histogram here as the moving averages look to converge upon one another, but there's no signals here, and there certainly isn't much of a read on the stochastics to go by at this point in time either. Coming into the new trading week, what I'm going to be looking for from Zilliqa is I'm going to be looking for those daily candle body closures above the top side of that liquid zone. If Zilliqa starts closing those daily candle bodies above 16.5 cents, confirming this as future support, then perhaps Zilliqa makes another nice leg to the upside in this new trading week. If Zilliqa starts to close any daily candle bodies below that 10 simple moving average, and as a matter of fact, I'll probably use this horizontal here. So if it starts closing daily candle bodies below this horizontal coming in at 13 cents, then likely a test of that 21 exponential moving average, which is coming in at approximately 11.5 cents. And of course, that's going to change as each day passes by. So long as Zilliqa finds support upon the 21, I will not be looking at this as any form of top. As anything closing and opening daily candle bodies above that 21, I just simply remain bullish in. And being that I usually buy the breakouts of these liquid zones, I'm just simply happy to hold my positions, and I'm happy to not front run these liquid zones. I look for those confirmation closures so I don't get shish kebab by all these wicks. If you look left, you can see Zilliqa loves the wicks. It loves that chop suey down here, wrecking traders to the upside, to the downside. So for me, I'm just happy to hold those positions when those breakouts occur. So at the time of recording, Zilliqa is looking good, as long as it holds above those levels. If Zilliqa starts closing daily candle bodies below that 21 exponential moving average, and I don't care where that happens, so that, obviously as each day goes by, the posturing of that 21 is going to be changing. But if any daily candle bodies start happening below that, then I'm going to be looking down to the 30 simple moving average here, which is getting above this former liquid zone and has a nice slope to the upside, and will likely play a little bit of defense on that liquid zone. And, could be a buy the dip scenario, but of course I'll assess the price action when it gets down there. Vechain up on the daily chart. And at the time of recording, I see Vechain's making another attempt at this purple box liquid zone that has a bottom side coming in around 5.5 cents and a top side coming in around the 6-cent mark. I see plenty of wicks getting into this zone and very quick and steep rejections to the downside, which is likely shaking a lot of people out of their positions. This reminds me why I look for those daily candle body closures above the top sides of these liquid zones, and of course a legitimate SR flip, so the former resistance becoming future support. Looking left, you can see that when Vechain was battling this liquid zone down below, you see a daily candle body closure right here, but then bearishly engulfed the very next day, creating a fairly ugly bull trap. When there was a legitimate change of behavior, you see this daily candle body closure here, the volume coming in was getting above the moving average, as well as wiping out the last several days of volume read. But the next day, that very quick back test of that zone, and then the rest is history. That was my actionable signal to get in on Vechain and then just ride it right to the upside. Quickly looking at the RSI down below here, the RSI is angled to the upside, looking good, and I do like how the exponential moving average is regaining the bullish control zone for the first time in quite some time. Toggling back to the price action here, you can see the last time that the exponential moving average regained the bullish control zone. Vechain over time went on to make another major move to the upside. So overall, that is a fairly good look on the RSI in confluence with the price action. So for me this week, coming into this trading week, I'm going to be paying attention to this. I'm going to be looking for those daily candle body closures above the top side of that liquid zone at 6 cents. If Vechain does that and confirms this as an SR flip, then I'll be looking for more upside. I can see that Vechain hasn't closed any daily candle bodies below the 10 simple moving average in quite some time. So if Vechain starts to close daily candle bodies below that 10 and say this horizontal here coming in at 0.052 cents, then I will look for a likely test of the 21 exponential moving average. At the time of recording, that 21 is coming in at 0.044 cents. So I'll be interested to see how price action interacts with that price level. Perhaps that could be a buy the dip opportunity. If Vechain starts closing daily candle body closures below that 21 and this horizontal here coming in at 0.042 cents, then likely some more downside will be initiated. And I see that the 30 simple moving average is nicely sloped to the upside. And I also see that the 55 exponential moving average is living not too far below that, coming in at about 0.034 cents. Again, if Vechain continues to close these daily candle bodies up around these levels, these moving averages will move to the upside fairly quickly. So I'm just going to pay attention to those and look for my confirmations to the upside, and I'll look for my confirmations to the downside and formulate my actionable plan from there. Loopring up on the daily chart. And the first thing that stands out to me is all these wicks down to the 21 exponential moving average and 0 daily candle body closures below that 21, which is showing me that bulls still remain in control. At the time of recording, this daily candle body is getting back up above that 10 simple moving average, and I'd love to see a closure come in at that point. If Loopring is able to close that daily candle body up around these levels, then likely a test of this purple box liquid zone that has a bottom side coming in at 82 cents and a top side coming in at approximately 89 cents. Coming into the trading week, I'm going to be watching Loopring closely. I'm going to be looking for those daily candle body closures above this liquid zone, followed by an SR flip. So I want to see this form resistance become future support. Then I think Loopring will be ready to continue marching its way up higher. And of course, I'm going to want to see that accompanied on strong volume down below, as the volume right now doesn't look all that great. It's below the moving average, and I'm going to want to see a nice pop. I'm going to want to see that, if price action resolves this to the upside, I'm going to want to see that accompanied by volume down below. Quickly dropping down the RSI. The RSI looks to be trying to find its footing in the neutral zone. The exponential moving average has lost the bearish control zone. So I'm going to want to see how the RSI responds to that exponential moving average. But if that RSI is able to get above that exponential moving average and into this bullish control zone on confirmation closures, as Loopring brings in these nice green candles, then that's going to be an encouraging sign on the board for the bulls. Down below here on the MACD, I see the negative island on the histogram here is losing its momentum. So another encouraging sign here, but of course we're going to have to see how the market does overall coming into the trading week. Now, if Loopring starts closing daily candle bodies below that 21, then a likely test of the 30 simple moving average. At the time of recording, the 21 is coming in around 68 cents, and the 30 is coming in around 61 cents. But as you can see, there hasn't been daily candle body closures below that 21 for a very long time, and so long as that hasn't been happening, upside has just been the name of the game. So likely if it does test that 30 simple moving average coming in around 61 cents, at least at the time of recording, that would likely be a bounce, just depending on what the overall market is doing. I also see the 55 exponential moving average getting above this purple box liquid zone right here, which is also encouraging because that is a very notable moving average to play defense to the downside. Thank you so much, everybody, for coming by and checking out the video. I hope you're all doing very well out there, wherever you're at in the world. And until I see you again, have yourselves a powerful day.